From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, November 13th, Friday the 13th, and you're listening to the HPS Macrocast. I'm Bryan DeAngelis, filling in this week for Tony Fratto, and I'm here with John Fagan and Brendan Walsh from Market Policy Partners. Guys, thanks for having me fill in today. Wanted to start with the mixed news we got this week. COVID cases hit a new high, 150,000 in the country, but can't believe it was just Monday. You know, great news coming out with Pfizer's potential vaccine, pretty big bump either from Pfizer or from news that Biden has won the election. So give me your take on what's going on this week.
Though before we start that, this is an all Massachusetts podcast, so I think we should do it in our natural accents.
Fair point. I should have had Dunkin' Donuts delivered. Yeah.
I can't even revive my natural accent on command these days. It's so far sublimated.
I need to be in a pub and seven beers deep.
Right.
Anyway, yeah, thanks, Brian, and we appreciate you filling in. You're doing a great job, obviously, and the news this week, it really was COVID came back into the driver's seat as the headliner. Everybody, I think, in the markets breathed a sigh of relief to get politics really off the top headlines and market drivers. Last week, clearly, we saw a lot of intrigue, but the market was really primed to move on to basically put that divided government base case in their models and get on with life. And I think that's kind of what we've seen. And it was that early Monday morning announcement from Pfizer of the exceptionally high effectiveness of their
90%.
vaccine. Yeah, it was higher than everybody had really dared hope. And you know, a lot of the estimates had been around like 60% or kind of the seasonal flu, 40 to 60% seasonal flu type. So this is very encouraging. And it generated a market response that we've seen in the past. We actually have seen sort of these flash forwards surrounding positive vaccine headlines. The first one that we really noticed was back in mid-August when Russia announced that they had approved the vaccine. And we saw the prevailing pandemic trends in global financial markets reverse pretty sharply. And it was fleeting because nobody really gave, you know, Russian vaccine all that much credit and a sense of really how, you know, but it was, again, that sort of flash forward aspect. And we got that again in early September when a lot of the drug trials were announced to be going into the third phase and you had gotten, you know, some really positive atmospherics around that. And again, we saw these, you know, the pandemic winners go into reverse in global financial markets. But these are, you know, fleeting episodes. And we saw the same thing this, you know, we saw on Monday and Tuesday, we saw like Zoom and Netflix sharply correct. And we saw the cruise lines and other sectors that are much more levered to the growth story, the global growth story, picking up the slack and what they call rotation in financial markets. We saw treasuries sell off on expectations of better growth. But again, this is the realism about the timeline of widespread distribution and herd immunity is it really is a latter half of 2021 story. And so again, we saw this, the focus of market participants on this tantalizing post-COVID world where, you know, your more traditional sectors get a bump. That sort of faded as the focus came back on the near term, which is this virulent resurgence that we're seeing in the US, UK, and EU. And again,
it faded pretty quickly, right? I mean, I talked to a few friends Monday up in Wall Street, and they were like, "This is it. COVID's over. We're turning the corner." And then by Wednesday, it's like,
this is a perfect example.
150,000.
Markets are efficient over the long term, but in the short term, they're not. On Monday and Tuesday, everyone's like, "We're going on a cruise," and by Thursday, we're all gonna die.
My Disney stock through the roof right now, crashing hard.
And you saw the headlines.
AMC, the movie theater was up 80%.
Yeah, and a cruise ship
wild.
just went out to sea,
Yeah.
and immediately they've had 5 positive tests, and they're and they're headed back to port.
Yeah, that's Darwin for you.
So this is a circumstance where markets are. It's really hard to generate the same kind of like mania and excitement about the stay-at-home stocks like Peloton and Zoom and so forth,
right?
Because we can see the light at the end of the tunnel. But that tunnel's still pretty long, and the near term is going to be really rocky for the sectors that have been getting this COVID impact and the real economy. And so markets are kind of caught in between here. So we've had some chop after Monday and Tuesday. We've had some chop over the last day or so.
Yeah,
and it'll be hard, I think, for markets to really determine which way they're going to go.
And the thing about the stay-at-home stocks too is they're not just stay-at-home stocks. They're also good companies. Like we're still going to use Zoom, when we go back to the office. Like Square is a good example. Like Square, this has accelerated our use of credit card payments. But Square is something, it's the toggle you put on, like when you buy from a food truck.
Yep.
Square needs to be in the real world. So it's not like a binary like it is with a movie theater. We don't go to movie theaters until there is a vaccine. The stay-at-home stocks, I'm still going to watch Netflix,
Right, exactly. John, I want to go back to something you were saying. It's going to be choppy waters. It seems like there's no help coming from Congress. We had all hoped there'd be something before Election Day in terms of a relief package. Then we hoped it would be punted to the lame duck. But it looks like, despite what he tweets, Trump's backing off. He's acting like a lame duck president. Mnuchin doesn't seem really involved. And McConnell doesn't seem interested in doing anything until he knows what Georgia's happening, what's happening in those 2 Senate races. What are you all hearing on that?
Yeah, our base case had been aligned with, and Tony had expressed this, and we talked about it in previous Macrocasts, that we thought that there would be some small ball, limited mini stimulus that came out in the session. But the chances are narrowing for that, obviously, as you said. McConnell has sort of poured some cold water on it. There are obviously some big differences. We think that there's still enough, modest common ground, whether it's repurposing the payroll protection program money or some, extension of unemployment benefits. There are small areas of agreement, but it really takes focus that we are not sure that they are able to muster under the current circumstances. As you say, the positive vaccine news is certainly take some of the wind out of the sails of the really big call.
But on the flip side, does the vaccine news help? Because now we have a time frame. We basically have to get to, say, April, May as a bridge to when people can start being vaccinated. So it's not an open-ended question anymore. So we know we don't really need $3 trillion. I don't know if 500 billion is the right answer, but it's much less than what we thought a few months ago. So maybe you can do piecemeal deals to try to keep getting us, and then once people start getting vaccinated, you can shut the spigot off. That's a question. That's not necessarily my thought.
No, I think it's a good point. I think Republicans are rediscovering their concern about deficits, and this will be a good kind of counterpoint to that of like, yes, there's an end date now. We're not talking about years and years of, maybe Powell would want it, I don't know, but the spigot being turned on. But we're really talking about, I think we need something short term now.
Yeah, especially to get through the winter. We know the next 3 months are going to be bad.
The unemployment,
and most importantly, they're bad. They're worse in the red states than they are in the blue states right now.
Yep. And then something to give the economy a bit of a jump start, under President Biden.
And that's the frustrating part from an economics and policy standpoint. The CARES Act really worked. The PPP loans and the unemployment benefits worked. It's amazing how well it worked. And now when we need it the most, it would just be such a shame if we can't do the best for America and get that money out there.
So when we look at this sort of constellation of circumstances, the Georgia runoffs, keeping the partisan passions high in Washington, D.C., the announcement of the vaccine, basically the sense that Mitch McConnell is going to have to keep his caucus together here, and this argues to us that the ball is back in the Fed's court, and when it comes to additional accommodations,
that's the most important point. Yeah,
we think that the $500 billion number that Majority Leader McConnell and the GOP caucus in the Senate have put out there is going to be the number that they hold really fast to. That's below where Wall Street wants. We think that's below what the Fed is envisioning, even considering where we have this vaccine on the way. And so we're expecting the Fed to start talking more about the potential for increasing asset purchases or accommodation here in the short term to try to give that extra oomph to the economy, particularly given the fact that they're focused expressly now on full employment in the lower income stratas. And those are the ones that have been hit the most. So if you're the Fed, you're definitely looking at the glass half empty kind of part of the picture here.
Right. All right, well, let's take a break here. I want to come back and talk about what we can expect more from a Biden administration and some of the hoops that they've been running through with the transition process. So we'll be right back.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The HPS Civic Science Economic Sentiment Index accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through hamiltonplacestrategies.com.
And we're back with the HPS Macrocast. Bryan DeAngelis here from Hamilton Place Strategies with John Fagan and Brendan Walsh of Market Policy Partners. Guys, I want to turn now a bit to the election. In my mind, the election's over. I think vast majority of the country agrees with me, except maybe the resident of the White House. But we're seeing more and more signs that despite some real obstacles this week on the transition process, that we're headed that way.
You're definitely seeing some leaks out of the White House that the president knows that it's over, but he kind of feels like he owes it to the 72 million people that voted for him to put up a fight. I also feel like it's kind of a business decision where, you
I think it's more the
rally your base and then you start a streaming news service in a couple months.
Trump TV is going to be the hottest thing in 2021.
Yep, I totally agree.
But I think you're right. I think we're starting to see people back off. You're seeing more Republican senators getting involved in terms of it's time to start briefing.
Yeah, I think
Biden,
Lindsey Graham said that they should start getting I mean, that probably tells you everything you need to know.
Right. Is this, this like procrastination, this inability to accept reality, is this just noise for Wall Street? Are they largely ignoring this, or
Wall Street really has moved on, and that's the market is forward looking. The base case is pretty clear here, but there still is that lingering uncertainty, obviously, around the Georgia race. And right now, with that runoff, that double runoff in January, it's easy for the market to kind of put the divided government into their models and start, and going on from there. But as that gets closer in the calendar and the polls, whatever they say, there's going to be a lack of conviction of exactly how this might turn out. It's going to be a very unprecedented situation. We think that, come the new year, market participants, or maybe the end of this year, market participants are going to be grappling with the uncertainty around that. And it's a really big delta. I mean, in poker parlance, the Democrats could kind of get the both houses of Congress here in the river card, and it's not impossible. And so we think Wall Street will begin to think twice about their conviction on this front, and that'll add some chop and intrigue to year-end market dynamics, which tend to be illiquid and a little bit whippy anyway. So we're watching that pretty closely.
Yeah, that's a good point too. Someone fact check me, but the last two times I think we've been in a situation where the Senate could flip for a president outside of a typical election, you've kind of had noticed. It was Arlen Specter kind of voting with Democrats and then just becoming a Democrat. It was Jeffords in Vermont, but you're right. We're really going to just sit there and then wake up hopefully the day after that special election and know who's in charge of government for the next few months.
Yeah, I mean, our base case is that it's a pretty steep climb for the Democrats to get both those. So we think that Wall Street isn't off base in that central scenario of divided government, but they're going to get cold feet about their conviction level, we think, as the election comes closer. And the other dynamics here, it's easy to sort of laugh off the current charade. It's not, depending on which side of the political spectrum you are, it's either, deeply undermining of democracy or just a charade, a little bit of hand wave here and that kind of exercise. But brass tacks really start coming down in early December, and the slates of electors and that sort of stuff. That's a tail risk that market participants are aware of, and it certainly has come up in the chatter. These are very extreme scenarios, and we certainly don't think that's we hope that that's nowhere in the nowhere more than a vanishingly small tail risk here in the scenario. But the fact that it's that there are even people talking about it is disturbing in and of itself.
It is, but
there's a lot of people that genuinely believe it,
right,
and some are for it, and some are worried that it's going to happen.
Yeah, I'm still waiting for that Donald Who moment where Pence and others start. They may stay loyal to him, but are they really going to try to do something on the Senate floor where they challenge him?
One of my neighbors who was a longtime Senate staffer said that too. Like right now, it's political suicide if you're a Republican, especially senator, to go against Trump, because he's allowed to ask for recounts. So
yes, absolutely.
Let the process happen and say yes. Once it's over, it's political suicide to stay with him. So you just have to let the next month or so play out.
I think one of the most, if you're trying to look for silver linings and things that are encouraging in all of this mess, one of the things that really is encouraging is the states. Boy, have they, held the line. You've seen, not exactly a lot of profiles encouraged from the Senate GOP and the House.
Right.
It's pretty, irresponsible language, you might say there. But the states have basically gone through the process and, stood by their state officials and their state processes and the way that they've done elections. And I think that, if you can be encouraged about how well, really across the board, a lot of the states that have been under enormous pressure here, the swing states themselves, how they've performed, the state officials have stood up and really seem to, take their.
And it's really the ultimate irony that
very seriously.
They're attacking Republican representatives for counting votes.
Right. Well, I took it, one of the biggest signs that Wall Street and others are moving on is sort of some of the, whatever you want to call it, panic or concern setting in on Biden's transition team. So we saw Gary Gensler named today this week to oversee a lot of the financial regulators. There's a lot of other names popping up there. To be clear, these are not necessarily the cabinet yet, but it seems to be a strong signal that Biden understands he's going to focus more on regulatory work, that he's going to have a tough legislative sled. We did a piece on this earlier this week, and folks like Gensler and others understand how regulations work. So
in my previous job, I was a bank analyst, and Wall Street is definitely starting to get nervous that the Biden administration is going to keep fighting the 2008 fight, which in most people's view, they did a great job. Dodd-Frank has proven to work. So there is a worry that these guys forgot what happened the last 10 years and are going to go back into 2008 mode, and banks are the villain and they need to be heavily regulated.
Yeah, and I think that's right. It's sort of I don't expect any sort of redo. We're not going to have another Dodd-Frank.
Yeah.
But it is the unfinished business of enforcement, and
the interesting
CFPB
part about all that is Dodd-Frank does set up a structure where each office has a vote, and the head of the FDIC is a Republican, and she's there till 2023, and she said that she's going to ride it out. So, and also at the Fed, the head of financial regulation, is a Republican, and he's there for another year. So you do have some checks and balances where they can't just go willy-nilly from day one and massively ramp up capital standards or change things.
Right. And some of this still felt like a nod to the progressives. I mean,
so
Dennis Kelleher, better markets. Like I don't see him joining a cabinet anytime soon.
But we saw Elizabeth Warren yesterday basically put out a white paper. So I kind of view that as her waving the white flag that she's not going to be 100%. Part of the administration, right? You wouldn't put out a paper if you were going to be part of the team, right?
Certainly not with that kind of agenda focus on it, right? I mean, you see Furman and others writing in the Wall Street Journal, but that's very much the lane they would occupy in the administration. Yeah. I don't see Warren doing it. Since this is a Massachusetts episode, Baker also came out pretty clearly the other day and said he will veto any sort of state bill that forces him to pick a Democrat to fill her seat. So,
but on the flip side, the Democrats do have a super majority, so they could overturn it if they wanted.
They could overturn it, but I just think it's clear she's going to continue to try to push in terms of personnel.
Yeah. And
I would be shocked to see Warren or Sanders end up in this cabinet.
I agree.
And so I want to test your intuition on this, both of you. If you're a bank regulator on the sort of bureaucratic side, you've got to look at what we saw in March, April, the COVID shock as a real life. They've stress tested the banks on paper, and then they got a real stress test, and they passed. If you're looking for the COVID crisis dog that didn't bark, it's that turning into a financial crisis. The banks didn't go to the brink, which is certainly possible. If you'd had the banks, you could argue that if you didn't have some of these regulatory situations in place, that the banks might have been in less able to deal with this kind of shock. And this was a major generational shock.
Yep.
And
this was, and you saw folks like Dodd and Frank take it as a little bit of a, victory lap. Like what we did was right. And it protected us from a huge problem in March and April. And those are voices I also think the Biden team will be listening to.
No, I totally agree.
So I suspect that there's kind of
we don't need to regulate just for the sake of regulation. Like, pat yourself on the back. Dodd-Frank did a pretty good job, and just let it keep doing a good job.
Yeah, I suspect that there's going to be a bit of a if it ain't broke, don't fix it approach to the bank regulation. And when it comes to financial regulation, do you guys agree that the focus is going to be more on the kinds of places where it's going to the financial industry hits the lower and middle and lower 100%. Classes?
So I think for the first 2 years, it's going to be the CFPB that is going, because they have the power, and it's a political appointee. So under Trump, they just shut it down and didn't do anything. So they're going to ramp it back up, and especially with payday lending and kind of usury stuff. I think for the big banks, the first 2 years is going to be much more of the same. I am a little worried about the last 2 years, where maybe you could get a raise in capital standards, depending on what happens in the Senate, and also you have 2 years to replace the Republican leaning parts of the regulatory structure.
Yeah, 100% agree. I mean, I think coming out of this crisis, what we learned in 2009 was that focus on kitchen table stuff. So when you're thinking about lending, bank fees, so some of that will be through a racial lens as well, trying to help communities that have been left behind.
Right. Disparate impact is going to be a word that is going to come back for the next 4 years.
Yeah, 100%. All right, let's take one more break. I want to come back and talk about he who shall not be named, kind of last throws here in terms of China and Shelton and a few other things. So you're listening to the HPS Macrocast. We'll be right back.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter @marketspolicy.
We're back on the HPS Macrocast. Let's talk quickly about some final agenda items. It seems like Trump's going to focus on in the lame duck. We saw the executive order yesterday about China investments. Walk us through a little bit of what he's doing there, and how likely is that to continue in a Biden administration?
Yeah, this is a part and parcel of the multi-front campaign that the Trump administration has initiated to counter China. And when we're talking about multi-front, we're talking about the trade front, the investment front, both into China and from China into the U.S., the tech and privacy, intellectual property front, the human rights front, and so on, and obviously trade as well, and strategic supply lines. There are a lot of areas in which China has global and international and U.S. focused ambitions that the Trump administration has begun to counter and has pushed back on pretty significantly. This is something that, as we've noted in previous podcasts, is relatively, the policy direction itself has broad bipartisan consensus. It's hard to find a soft on China constituency around Washington, D.C.
Anywhere.
And so, the difference in the Biden administration is really going to be about prioritization and emphasis and style. Obviously, the more multilateral, Biden has said it himself, he's going to take a more multilateral approach to these. And it certainly seems as though human rights is going to come up the priority list, and trade is going to come down. That doesn't mean he's going to let China off the hook on the tariffs and unwind the phase one trade deal. I think when President Trump does stuff in the by executive order here, as we saw last evening, I don't think the Biden administration is going to feel all that bad about it. I think that they're going to say, well, they're making some of the tough decisions that we would have had to make. This was something that had been flagged before. It's an executive order blocking U.S. investment in Chinese companies that are tied to, specifically tied to the Chinese military. I think it's a list of 31 companies. Is that right, Brendan? That's right. And
it's 31, yeah. And they name all 31 of them, but there's some big tech firms on there.
Yeah, and so if you disgorge, it's you don't have to immediately disgorge your holdings, and these show up in portfolios and ETFs and indexes. It's hard to find. There are a lot of people that hold these stocks that don't even know that they have them in their portfolio and so forth. Just the way that investment is these days, very passive, and so it's. You don't have to. I think it's 2021 by which you have to actually get rid of these if they're in your portfolio. But it's not really clear.
Yeah, exactly. Like end of 21, right?
Yeah, right. It's not exactly clear the enforcement mechanism, and then going forward basis, buying and selling of them. We're joking, like the two big ones that are publicly traded in the U.S., China Telecom and China Mobile. Like we're joking that this, like the Trump administration, if you got these in your portfolio, the Trump administration just did you a favor. These are dead money. These are lousy companies. They're big, like lumbering state-run, way past like the heyday of these ages ago. Get them out of your portfolio. It's a good reminder.
Yeah,
they've just been really dogs for years. And that's not just in the U.S. That's the same in Chinese markets too. But
any other economic wild cards you guys expect Trump to play in the next few weeks?
So there are two ways to look at this executive order. One being this was, a relatively modest impact, and if they're really going to go nuts, this isn't that. Right. And so by doing this, maybe it shows that they're tying up some loose ends. They're following through on some of the things that they'd gone well down the planning road on, but they hadn't actually gotten a chance to do. And it doesn't show like wild shooting from the hip and blind firing at China here. This is something that they've already done a lot of work on. But it does, on the flip side, it does raise the possibility that might be coming down the road. We've got a lot of time between now and President Trump's exit from the West Wing. And so this could be the first thing that they get out the door, and then they start rummaging through the rest of the anti-China executive.
I mean, I went
order.
from excitement last Saturday night to, oh my God, he still has 75 days. And
Yeah.
who knows what's going to come.
And I suppose some of the risk is on the military side, where we're seeing them replace, career military people with partisan. Right. So maybe, something in Iraq, maybe pull troops out of Iraq. That's my fear on the geopolitical front, that we make hasty decisions on the military side.
Yeah, exactly. How about the Fed? I know we've only got a minute left, but believe it or not, it looks like Shelton will be confirmed next week.
It looks like that's a done deal, right?
I think she's going to get 51. And
yeah.
I was actually talking to Tony about it this morning. I mean, McConnell wouldn't bring it to the floor if he didn't have the votes. So, things can certainly happen in the next few days, but I think she has the votes.
Yeah. I mean, the one thing I will say, while her views are definitely different than mainstream, the Fed is a body of lots of people, and you only have one vote. So by being so different than the rest, even if you vote different every time, you basically ostracize yourself so much that no one even pays attention to you, because they already know you're going to vote against the rule.
Well, I'm no expert here, but let me ask maybe a dumb question. I'm okay with that. Can Trump do anything crazy after she's confirmed, like fire Powell and name her Fed chair?
That seems I wouldn't. You don't want to rule anything out. Hey, it's 2020. It's Friday the 13th of 2020.
Right.
Right.
Seen that meme?
But on the flip side, Biden could just undo
You're welcome
it.
for that night.
Yeah. But if Trump was allowed to do that, then Biden also would be allowed to do the same thing.
Yeah.
Yeah. I mean, the Judy Shelton, the concern or the hook sort of for financial markets was that she would be Trump's agent on the FOMC, and that she obviously had, a lot of intellectual background and academic work, putting a very, very hard money kind of position out there for years and years and years. And then in her tryout for Fed board, seemed to repudiate a lot of that. So there was a sense that she was maybe not necessarily clear in her views. And she was a wild card and more of a political operator.
It's a really, really important point.
Be on the board.
Yeah.
And so
really
but now with President Trump going to be private citizen Trump, it's kind of a different story. She doesn't
does she go back to being the gold bug?
And so that the likelihood, one would guess, that she would revert back to her original leanings, which are very much about hard money and that sort of thing. And one of the things that when you think about when we step back and kind of think about the Fed as an institution, really the Trump administration was the first one in a very long time where the executive was, trying to view the Fed as just another, partisan institution.
Another thing he controlled, right?
Like, I've got to get my people on there. They've got to do what I want them to do and help them back me up. There were a lot of Democrats in Washington, D.C. that we talked to through the easing cycle in 2019 that asked us kind of off, on the down low, do you think the Fed is doing this because the president is pounding on Jay Powell? And, it's a very difficult position for the Fed to be in. And to politicize the Fed board, honestly, if you have one, the problem for the Biden administration is if you have, the Trump administration and maybe, future administrations seeing the Fed board as needing to be, populated with their people, how do you counter that? And so I think that's.
I totally agree. Judy Shelton on the Fed board under Trump, I think, could be dangerous because she would just do what the president said. Judy Shelton on the Fed board under Biden, actually, I think could be a positive, because one thing that the Fed probably has a little bit too much of is groupthink. So having a disparate, opinion on things is not a bad thing
Generally, yeah. And it's a pretty short term if I'm.
Yeah,
correct,
it's a stub.
Yeah. All right. Well, let's leave it there. I'm sure we'll have plenty more to talk about in the weeks ahead. Thanks everyone for listening to this special Massachusetts edition of the HPS Macrocast. Please remember to subscribe, rate, and share. And I hope everyone has a good weekend.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.